So you are trading, have told us I don't need to go back there. First is that you already had your key levels marked out, and that is very sacrosanct. Now, you're going to read up all of this for Forex and all the like. We have different trading styles, but the simplest out of all is support and resistance, which we talk about. But while doing that, you are going to incorporate some things to perhaps just to understand liquidity when it's being grabbed and all of that. But support and resistance with multiple weeks, price actions and MACD, of course, have told us. Now, so in a nutshell, you're going to read up all of this. Maybe you're going to do so daily trading check match, supply and demand zone, 1 hour trade strategy and session breaker, key level, daily bias with candle close and open, retracement, 4 hours Fibonacci of the first 4-hour candle, time frame, M5 and M15 market execution, trigger, retest, rejection, breakout or Fibonacci retracement, confirmation, candle and chart pattern, multiple weeks, order block, fair value gap. All of those are your confirmation. The wall ratio, 1:2. Of course. So these are basic things that you want to do. Checklist, daily market bias and key level, 1 day, market structure and trend, 4 hours or 1 hour. That is, you want to see the trend of the market. So let's go. Let me start from the reef, because most time people, first of all, of course, in your trading activities, you have market instruments you want to be trading. Very important. Like myself, I trade boom 1,000 very often. So I could add all of this one. So in case maybe I'm looking for a trade I couldn't find, if I find in them, I'll pick it. But take note, if I must pick any of the instrument for the day, I will stay with it. So basically, what do I want to do for the day? So what do I want to do for the day is that I want to go on daily time frame, which ordinarily you have marked your key levels on daily time zone, which is very, very, very important. So if you look at this mine now, okay, you see this mine. So this is 24 hours for the reef, right? Okay, so the same apply to other instrument. And I actually marked, sometimes I just come, I will mark, if it's the one I pick, I mark the high of the day, of the previous day and below of the previous day. Now, first of all, you want to look at the daily bias. Okay, market open and first went up. That means for that day, market is bearish. In the case of boom and crash, you can always find trade in between, but you will not do much of holding long time because the market is bearish for that day. That should be very, very important for you. Okay, so let's take another one. Probably I could find this. Okay, I could find this. Now look at this. So when you come, this was the previous day. The new day actually opened, first went up. Of course, you could see the head and now coming down. I don't waste much time. If I wake up early, I will not use the 4 hours time frame. But if market has opened for the past 4 hours before I wake up, I don't go to the previous tie. And you know the previous tie is that you just want to know the bias of the day. Okay, is the market bullish or bearish? Okay, so if the market is bearish or bullish, that's the first thing you want to know on daily. And of course, at your key levels too is very important. Okay, at your key level is very important. In order to do what you want to do properly, you could hide some of your indicators. All right, you could hide some of your indicators first. So you now say, okay, let me hide my indicators. So all those, my 200 moving average, all of them are going to be hidden so that you can see a plain activities. Are you getting it now? Okay. So I've hid my indicators. So this is a plain chart. However, I have the daily break, season breaker. Now, on a daily time frame, I've come and see that the market was bearish, first of all. So how? This was the previous day candle close, and it was bearish anyway. The previous day, a day before that, was bullish, but this is gravestone doji, which signifies a potential reversal. Do you get it now? All of this signifies potential reversal. All right? This signifies potential reversal. So sometime when I find it at a key level, it give me to be conscious of what's about to happen. Sorry, just a moment. I just take my time to explain all these things out, but unfortunately, most of us don't even settle down to go through them. But I'll keep doing what I'm doing, so it will get to the right person. So now, if that's the case, as you just first woke up and you discover that market is bearish, no struggle, no struggle. You know, at that time, market just to start. So when market just start and you come in, okay, market is bearish. I'm going to go down to perhaps to check the market, So if you go to 4 hours, you're going to see that the markets, obviously, the trend of the market is bearish, both 1 hour and 4 hours. Okay, you could see that obviously because this is the new day. Look at where the market is coming from. You obviously know that the market is bearish. Let's stretch, we can see. We obviously know that the market is bearish. This is a high, this is a low, all right? So a low here, a high here, okay? This is a low, all right? This is a low, this is a high. So we know that the market is bearish, very simple, right? Good. Now, if you go to 1 hour, it's the same thing you are going to find just to understand the trend, all right? And of course, I use some candlestick on 4 hours for important, decision, okay? I will explain to you what I use them for my important decision. Okay, so now let's go straight away. So I will go down if I've seen that the market for the day is bearish, right? What do? I'm going to go down to as low as 1 minute. Now, as low as 1 minute, what I'm looking for, 1 minute, 5 minutes, what I'm looking for is what we call market structure shift. And just like change in direction of the market. So let's step back. Let's go. Good. So you just woke up, right? You're seeing that the market for the day is bearish because first went up before it went down. So here we have the market, depending on where you come. So market have even done this. This is at 1 something a.m. So if it's here you come, you are still going to do the same thing because of one minute time frame. Okay. So you have seen, you are going to use both even your support or market structures change, shift. So now let's go by this. This come flat. Okay. Right. So here is this. This trend was not too palatable anyway. All right. So, but your own is that you are looking for a situation where, what do we have here? The market was doing what it was doing. So you are going to do this very simple thing, your support and resistance strategy, okay? You find it here, right? And of course, we want to see the market changing its structure. You return back here, and then this is a high, and this is a low, and this is a high. This is lower than this. That's LH, lower high. And this is a lower than this. So it signifies, and which I still use 1, 2, 3 pattern. This is 1, this is 2, and this is 3. Most time you are looking at 1, 2, 3. So 3 should break 2. Okay, so look at what I'm doing. Very simple, okay? So here is 1, here is 2, here is 3. 3 should break 2. Now, ordinarily, because you want to be very conservative, your entry is when this first break, you get small entry. You are doing like this. You are saying, okay, my first entry, go inside now. Okay? my first shot, probably here. Now, where's your stop loss? Below, that is above this one. All right. Now, you've done that. Where's your take profit? Of course, we are going to see it by the time we stretch further. You know, this is 1 minute. You're only looking for sniper entry because the time you actually woke up. All right. So, where is the main entry? When the market actually broke out of this and now retest back. Retesting back, you are wiring your market. You will eventually see that everything still happened at this point. So second entry here, your stop loss is still here, and then the market continue to go down. Okay, so the market continue to go down. So we're now going to go to 5 minutes. So you add more position, right? Then we'll go to 5 minutes. So what are we doing in 5 minutes? Very simple. In 5 minutes, you are going to see a better structure. All right? You are going to see a better structure. Perhaps you want to look at your left. Are there places where markets will pull back? Obviously, you cannot see. Then that your rule of 1:2 apply. So let's see 1:2. This is 1:2. So this is your 1:2. So your first take profit is actually here. All right? Your first take profit is here. You have taken the first take profit and allowed the other one to continue to run. Are you following me now? The other one continue to run, right? Now, this is where your indicator sometimes coming because you may not have the understanding. You are now saying, okay, let me put in my 200 moving average and of course, maybe 14 or 25 moving average, sometime with 50. So now, let's look at 50. So now what you are literally doing here is that you say when market pull back and return to, all right, because this you may be tempted to buy. Always remember one thing why I say you use your trend line. If you don't understand, you will be tempted to buy because you see that this one is pulling back. Yes, I have indicator, I call it Felix hack on MT5 that I used that actually may want to buy when opportunity present themselves to me. Do you get it now? So, but in your case here, I've told you something. Don't look for buying opportunity when you are below 200 moving average. Always look for selling opportunity. Number two, because you are even biased for the day, your bias for the day is bearish. Don't look for buy opportunity. Look for sell opportunity. Because every major move back in a bearish market is just a major pullback. And you are still going to sell. That's what you want to do. So at that point, all right, you know you have, and if you actually wake up on time, you will have found an entry now when it did double top, as it were, or double whatever. Now you are finding an entry when the market pull back massively this way, and now continue to go down. Then you want to look at what is your MACD going to tell you. Let's look at MACD. So because in between, you have even short, right? Okay. Now, I will show you something very, very importantly. If you look at your MACD already tell you that you should be looking for shorting opportunity because MACD is literally continuously being below the zero line. Are you getting it now? Look at it. Below the zero line. So anytime the MACD crosses below, you are looking for another sell. Look at this sell here. Because you have identified, all you need to is to understand the trend, to identify the trend where it's going to. And I've told you anything below 200 is a downtrend. And of course, you are looking for another short. That means you will have find another stacking. And this can be achievable when you face one instrument per time, as when you identify them. All right. So you have this again. you have entered another short because look at it. That's where you're using the trend line. Sometimes you just take them off. But if you understand if you understand your price action, so you now, what we're doing here is that the market, this is a low and this is a high, which is lower than this one. So why do you need to panic? As long as this market did not come to capture this, you are still bearish. So you get here and we checked. Now it creates another lower low, lower than this. A pullback from this low and rejection is another entry, which is lower than this. Are you seeing it now? Now, even your indicator now told you yes. Then you are now pushing in new entry. Are you following? So now if you push in new entry, remember the one you enter here, maybe in one position or two, are still open, then you need to trail those one and then adding more position here. This is achievable when you face one instrument per time. And of course, when you are tired, you have trailed, you allow it to run and just be stealing your stop loss to just be trailing and trailing. Okay? This is applicable to everything. So you don't even tell me, hey, what of so instrument? Every instrument have a same structure. All right? So you can now see if you go to your 15 minutes, you are going to see more broader. You know, why you go to those 1 minute is to find a proper entry on time. Then there you go. Look at where these are my key levels. This key level was drawn before the market came back here. And then you could see it broke this, it got to this key level. I want to reverse, but it couldn't make it. And there you go. The market continued. The same way, if you go to 1 hour, you're going to see the trend and the structure properly. But you can't just wait for 1 hour because you want to day trade, and that's why you're doing what you're doing. Can you see now? You could see it properly. These are the things, right? If you see on 1 hour now, it broke out. Remember what we say. This is like fail. Having this, you already marked this, but this is a fake out. So like maybe sweep a liquidity that was here and return back below the key level. And then the next thing spiking back here. So for you, ordinarily, when you see your market at your key level, you prepare for it. You prepare for an action. That's one of the things. And that's why you don't need too many instruments at a time. All right? So this is done. And then you continue. So, but you must continue to take profit at interval, especially when the market get to certain level. And then the new one you start, you take profit and all of that. The same thing apply to this. So, this thing is very simple, but most time we don't pay attention to simple instruction. Okay? So here we have this again, just like a rally. And a rally, it broke the previous support, which you mark in this way, and then return back. Okay, this is actually 1 hour. Yes, it broke the previous support and now return. Then you are looking for a selling opportunity. By the time you go to 5 minute or 1 minute time frame, you will have seen this entry properly. And then by now, you'll be in profit. And most time, when I short such opportunity, you want to be careful when such market gets to maybe 200 moving average or whatever. And so that's one of the fantastic stuff about all of these things. So I'm just doing, this is just a kind of reverse, what do I call this? Now, this is gold. Now, I sold gold. I sent a signal. When a signal on gold for buy, and eventually was now doing what it was doing, and I have to sell some. Let me check. Just a small position. It's at $17 already. Then there were other ones I entered earlier. Oh, was not here. I think it was on my MT5. So my MT5. Oh. So, if you are trading, you want to, maintain a very good atmospheric condition, and you want to face an instrument so that you know what you are doing per time. Okay, so my MT5, they are all in profit, because now this is gold and you see what it's doing. I see I short a market here. Was it this? Yes, I think it was this. Okay, it was 17 where we came. Now it's 13, 15, so it's just ranging. So you see my take profit down here. Now, why am I showing you all of this? So that, please, when even a signal is sent, you can easily verify if you should take it, if you are late or you are still early to the signal. Okay? If you are late or you are still early to the signal. I've told us, so we saw this signal the previous day when I gave it out, and I said this is a resistance that the market's going to be struggling here. But you have taken some profit. Eventually, you see what really happened, and the market stopped there. Even your MACD getting up there already show sign of bear market. So your MACD show bear market. How? Excuse me. So your MACD show bear market. It showed a bull market here. It showed a bear market here. Once it crosses below zero line, already starts showing a bear market. Okay? The news is about to be released at 2 something. So we have to be very careful. So I'll have to, the news is about to be released. You can see the news. So we said even most time when you come into the market in the day, you want to check, are there any news coming? So there's a news by 2:30 CPI, previous 0.3. So if it's 0.2 this time around, that means, what did they say? Greater than previous. Okay, so actual greater than forecast is good for the currency. So if this now become 2, then gold will reverse and go up. If it become 3, or even if it become 3 or even or higher than that 3, so you may still find another thing. So now let's see my trade. I perhaps may want to close it if I'm okay. How many, what's the profit? What's going on? Okay, so it's $29, $26. So this one should be, okay, this one was small lots. This was small lots, 0.05. Okay, so you can see gold dumping. I send the signal for people to enter gold. So there's already a fear. And of course, by structure, gold was bearish. Okay? By structure, gold is bearish. So I'm going to do another video to the support and resistance strategy we have said. And at the same time, yeah, the pattern of when you wake up late, when market have done 4 hours for the new day, so what you are expected to do to now follow up your trade, right? You can see, so news is about 10 minutes away. And if this happened that we are going down massively like this, if the news now disfavor US dollar, Then we are going to have gold, right? We are going to have gold reverse. Okay, I'm just taking some profit on this particular account. Oh, wow. That's even done. Oh, it even came on top of 200 moving average. Okay. So like this now, look at it. I can do what they call partial close. So if I click on it now, and I want to do partial close, so I can say I'm closing 0.2, depending, all right? Or I'm closing 0.1 or 0.01. Okay, you see now. So that means you want to what's the trade locker is amazing, right? So I can say, okay, I want to do partial close depending on what I'm envisaging the market. So if I click it now, I will close part of my trade. Okay, so the news is about 8 minutes ahead. Should I do partial close? Yes, do partial close. Confirm. So I've done partial close. I've taken some profit. Okay, and so allowing the other one to run. Yeah, so it's just that the news that is coming. So what then can I do since the news is coming? That's the next question you ask yourself. The news is coming. What should I do? And I still expect the market to dump. So now you are now going to look at what point did you enter the market? So you now want to go to your market and look at your market and go and trail your stop loss should in case. But I know that gold have that behavior. Okay. So if you look at your market, this market was entered to at what price? Was entered to at 2881. Okay. So 2881. So you can go and edit and say your stop loss. 2881 was entry. So you can say 2875. Are you seeing it now? 2875. You know, it's 2881 that was your entry. So 2875 or 28, let's see where it's going to appear. 2873. Okay, 2881. So 2880. Okay, so that it just trails stop loss for you. So let's go to 2879. I think something like that. Should in case the market is going to go terrible, you still be in order. Remember, we have closed partial, then you click on confirm. Then your take profit, you still allow it to be, or if you like, you want to extend it, you can do the same. I'm seeing the market is actually reversing. This is my own profit that I left here. That's the behavior of gold when news is coming. Okay, let me just close this one. Now, it's going to close me out, though, at the end of the day, and still continue its journey. That's one of the things you need to understand when it has to do with this market. So, ladies and gentlemen, my target was here, but let's watch what happens.